Good day after everybody. Alexander, Richard, Tiernan Coyle, nice to meet you. Hello, Hugo. Finally, right? So this is what I've been looking for a month. First they took the dollar bulls out. Now they're taking the dollar bears out. Everyone see my screen and hear me? Give me a Y.
Yes, mate.
Everything cool? Hey, Ryan, how are you?
Yeah, not too bad, mate. You?
Pretty good. I mean, almost everything I talked about, I wish I had done everything I talked about on F.A.C.E. So Euro finally taking care of business down here. Doesn't mean I rush out and buy it. I still think that there's more upside in the dollar, maybe another 100 handles in, 100 pips in Euro. And the yen still smoking. Still think that we're going to 117. Gold's on the verge of breaking down. If it takes out these moving averages here, maybe we get a flush here. What I was looking for. Also silver, still $1.40 off the highs, but I think they're going to go for cleaning out the longs under this little double bottom. And who knows what to do with the S&Ps, and looks like we're going to try and rally maybe into early next week, try the 4,500 level or so. I think that's about it. Yields are coming off just a little bit, Ryan. So you stayed with the yen, right?
Yeah, I'm seeing it.
So the next rally up there is going to be a 3. Based upon, I didn't make this up. What's the name of the guy that I learned this from? I'll think about it. I'll remember. J.R. Hill. Okay, so, we'll have a 3 up here. And, between 97.80, 98.20, if we're not confirming those highs, it's not only the price, it's how it gets there.
Exactly.
So what are you thinking now with the dollar making new recovery highs, Brian?
Yeah, obviously last night the Powell was super hawkish. He didn't throw the Fed put in.
And that's a tip of the hat to Steve Volge, who said that the Fed would disappoint.
Yeah.
Yesterday when he was on, good call, Steve. I don't know if you're here, but nice call.
Yeah, and we all said he wasn't gonna show his hand to the stock market and prop it up. I thought he'd be a bit more cautious on the expectations, try and dial those down a bit, but he wasn't. So here we are. But the thing you mentioned about bonds, yields and didn't break the highs in 10 years, and they're coming off. So I know if Cayman's about, so he'll probably embellish a bit on it a bit more, but we're getting the feeling that
I think Cayman is. I don't know if Cayman will talk. He's prepping, and I'm sure very nervous about being interviewed tomorrow.
He'll be here, but I think we're looking at the.
I'm as calm as a leaf in a storm.
In a hurricane.
Yeah. But we're looking at these. We're looking at these yields, and they're coming off today, and the dollar's still going up, and so we're thinking that this has got a whiff of end of month to it. We've had some of the model calls out today, all of them pointing to dollar bullishness, dollar buying needed to be done for month end. Sometimes they wait until we're over the Fed hump or a big event hump, and then they all come running in. So it's got to be watched. There's no denying that he was super hawkish last night, which is dollar positive. But the fact that yields,
it's still there, Ryan. Fact that yields didn't make new highs and could come off again.
Yeah, we just lost him
yo. Into the ether. Huh?
Ryan? No.
Sorry, he was.
Yeah, well,
couldn't get up to the recent highs. And then
there he is. Ryan, we lost you for a good. Lost you for a good 15, 20 seconds.
Little wobble on the internet there, but as I was saying, the yields can't make new highs even though he's confirmed the super hawkishness, and we're
Right.
seeing those $4 rise, that's a little bit of a worrying signal there as to what's driving the dollar right now, and we think it's possibly end of month.
Okay. Any option expirations where they're going to try and peg the euro at a certain price? I know that you and K-Man watch that a lot. You especially.
Yeah, there's not really a lot, which reminds me, I've just realised I don't think I've done the options today. So
Okay.
I need
All
to
right.
rush off and do those later.
Yeah, I bet there's a lot of stuff at 111, 110. Be interesting to see if there's more calls than puts on the open interest too down there. Okay, so K-Man, you
Just
still
just
like
quickly, just
oh,
sorry.
go.
Just
Yeah,
quickly.
okay.
When I looked at the options this weekend, because I do it in
Yeah.
advance, as the guys in the room will know, there wasn't actually that much outstanding for today, because I think the market was like, it's going to be a nothing meeting. Just a quick look now. We've got, where are we? 115.50 in dollar yen. We've got 750 million.
Is that big size?
No, small. In
Okay.
in euro dollar, we're just around the 111.50, and there's 700 million. So there's not a lot.
Okay. All right. Stell, how are you?
Good morning. I'm
Good
very
morning.
good. Thank you. Very good.
Good.
So we got, we're talking about what the Fed's going to do yesterday. And Steve very correctly said that they're not going to do anything different, and they're just pulling full speed ahead. And as I wrote on the chat room and I tweeted about it, I think that as long as stocks are not 20-30% lower than here, they're going to try and get as much as they can done. Having said that, the dollar is really strong today from yesterday. Basically, it is breaking out, like you said, but something doesn't add up. So you have strong dollar, weak metals, yields, dropping a little bit, but they're still, relatively elevated, and stocks are just pushing forward, which doesn't make sense to me. With the dollar strengthening, I don't see how stocks are going to be rallying from here. So I still have a bearish bias. I think we should be selling the rallies. I know famous last words, but I do think that things have changed, and the Fed gave us nothing dovish yesterday. That's the thing. They did say, actually, no, tell a lie. They did say that we are talking or thinking about the next meeting. I can't remember the exact wording, but about the next meeting's hike. Basically, he didn't say, right, we're doing it. It was a little bit more vague, but I think the market knows that this is going forward. Nomura today, they are going for a 50, which again, I don't think, of course it's possible, but if you understand the Fed a little bit, they're giving us forward guidance. They're telling us all these things so that the market doesn't get spooked. So why would they go ahead and do a 50 now? It's already a very aggressive and optimistic, let's say, path that they're telling us that they're going to go with. So the end of the taper by the next meeting, and by March, and a hike next meeting, and they start tightening shortly after. So maybe, I don't know, June, whatever. So this is already very aggressive and optimistic, I think, on their side. So why shock the markets? I wouldn't see them doing a 50, but the market's definitely we're fully pricing one, that's for sure, 125 hike in March, and we're now, the Fed Fund futures market's pricing 5 hikes. So this is it's now getting a little bit out of hand. I think it's a little bit too much. Obviously it could happen, but I think that now the risks are slowly starting to stack towards them under delivering. For the moment though, we have a hawkish Fed. They're just going to put the pedal to the metal, and they keep going. So as long as that happens, I don't see how stocks can be outperforming here. Today's price action, it's mystifying a little bit for me, but I still think we should be selling rallies.
Well, yeah, and it looks like you're going to get one because Garago's tweeted after our Monday's seminar that this was the end of 3. And that we were in 4. So, this could have been A of 4, B of 4, and now we get a rally for C of 4 before the next
Could be.
low, next low. Maybe it's 4,500. I mean, what was Blake's level? Was it yesterday? And we talked about this yesterday, that the Fed would disappoint and its 200-day moving average could be a good zone to sell. That was at least a great day trade. So, I mean, maybe we're going to head back up and take these highs out by a little bit. And then you should get the 5 and then a better rally. But that, that's the way it looks to me. And, Blake, I know Blake, you've been looking for new lows in the euro for a while, and use that commercial from Southwest that, the RSI was not oversold anymore when it was doing this. It just had this one little shake out of the euro bears, and now the euro bulls are gone, right? So
yeah, I mean, we're here. This is such a key level for the euro, in my opinion. I think anywhere between where we're at and all the way down to 111, you have to be very, very careful about being short. This is that big trend line that was broken from 2000. Oh, I'll show you here. Yeah, let me pull up the actual. I'm going to pull up the longer term chart that has no.
This is what we've been waiting for months.
Yeah, I mean, this is it. I mean, here I'm getting it. Sorry, just give me a second.
Okay. I'm short, by the way.
You are?
Yep.
Good, buddy.
Oh, all right. Well, let me see.
The only thing, don't forget, if I can just add one thing, we are end of month, and today is value date end of month. US corporates may have an interest to buy dollars if the tradition is respected. So a little bit take into account, because for instance, euro yen has been moving without all the rest in our morning. So be a bit careful for corporate flows today. It might distort the picture a little bit. That's all I want.
Okay. Thanks, Ken. I do appreciate that. And one of the things that I learned spending, the several years trading with the Gelos group, with FX Macro and all those guys, is that flows really can dominate, especially end of month, end of quarters, and especially when you've had some big moves in equities. And that's what we've seen some massive selling of US equities this quarter, or this month, excuse me. And so that should translate into strong dollar buying flows. Now, whether or not those have gotten pushed through the market already, or a majority of them have, we don't know that, but that's what it should translate to. I think, K-Man, you were very correct by identifying that today. But real quick, I want to just show you guys, this is why I think you guys have to be really careful being short the euro dollar at these levels. And if you guys have been listening to my, me rant long enough for the last year, that I'm always very cautious as we approach this trend line. This is a trend line from 2008. You can see it 2008, 2014, 2018, 2020. And when we broke that 2020, I turned really bullish to euro. And I have to admit, I was very bummed out. This is all we got on that euro break. I mean, and you guys know the reason why that is not anything more than, it's more of a, post-COVID, dollar move after that. But, the dollar has really, we're pushing back down to this trend line, and I'm very, very hesitant to be short euros down here. I think it's been a nice ride, and I think that being long the dollar has been great. Hell, I've been long the dollar against a lot of different currencies over the last couple of months, and it has been phenomenal. And but I have to note that the euro's at some pretty key levels here, and you have to start really. It's not as easy. It's not as black and white as it's been for the last few weeks or last couple of months.
What you say, Blake, is very important, because here we're looking at two different aspects of trading. If you go into a 15-minute of that chart and do a zoom in, We've been looking at this range, the 112 to 114 range, for the last few months.
Yeah.
And so here we've got a break of that lower area. So if you're trading more short term, which is what I've done today, and a bit of what K-Man's doing, I was long into this 112, 111.70 area. The same way I went short into 114, but now I flipped it into a short here on the break because this short-term range is broken. So you're 100% right. For short-termers, you look at the break here. On a more longer-term basis, you take the longer-term tech into account, because if your short is going to run into trouble, it's going to run into trouble against your trend line. And it's very important to why traders should look at all time frames. Don't just stick to a short term or a long term. Look at all the time frames.
Yeah, and that's a great point, Ryan. And one of the things that we do on the morning edge, which is in exactly 1 hour from right now, if you're a ForexAnalytix subscriber, we do like a private webinar. It's for just the clients only, and we build out this bias chart every day. And one of the things that I like to do with everybody is kind of a top-down analysis, because we look at the daily charts and then we go, okay, well, here, since we do it every day for the same instruments, if you're there every day, you've got the gist of a lot of the long-term stuff. Like, I won't sit here and spend a lot of time on this chart today because everybody that's a ForexAnalytix subscriber already knows it. But when we see these big, key levels on the daily chart, I'll say, okay, well, here we are on the day. Let's take a look at a 4 hour chart. And, at the 4 hour chart, this is where, you caught everybody on the long side. If you don't recall, everybody was a dollar bear. Yeah, for very short term, but they were a dollar bear, thought the euro was going to rally, and got all the bulls got, squeezed out here. And then here we are, we reversed. And like Dale just pointed out, we're doing the exact opposite. So I would say that you got to be a little careful, chasing the markets down here at these, because where all these key levels are. But it's doing more of that top-down analysis in the markets. And then you get intraday and you're like, okay, well, I hear what you're saying. And if I'm Ryan and I'm trading short term, the euro, and you're European, here comes, Blake just wakes up, and I sit in front of the computer. I'm like, I refresh your memory. Hey, there's some pretty key support down here, and you're like, okay, but I've been short since 112 from this morning, in European trade. If I was in your shoes, Ryan, I would say, hey, if we get back above here, I don't want to be short anymore. And that's the thing about trading, is understanding, where you're at. And hell, you got North American traders that are coming in that are, they could influence the market here. And so you just need to know where you're at, right?
Exactly. I said exactly the same thing in the room. If we get back above 111.70, 80, I'm going to start questioning my short.
And real quick, while I got everybody here, before we go into Mark Chandler, who's coming in. By the way, Dale, just so you know, I've got Mark Chandler on the horn later today, which is pretty funny, right?
Yeah, we're sandwiching him.
Yeah, we are. I love Mark. He's I think I want to say about 8 or 9 years ago, he sent me his first book. And I've got like, I think his wife specifically sends them to me. So, to help me sleep at night. Mark and I joke about that all the time. But he's such an awesome analyst. I love listening to his ideas, and he thinks a lot of big picture too. Anyway, but he's coming in a little bit later.
We'll be talking employment cost index today.
Ooh, he's great, man. He's great at digging in the dirty, man. He really is. Anyway, I wanted to say that, these are some of the conversations that happen I wanted to highlight this with, this is our general chat room, right? The Forex flow room is is more of the we're going to call it the Flowonomics. Is that what it is?
Yeah.
Flowonomics room, which is basically economics, macro chat room. We have the general chat room, news and research, trades room. You can see, you guys can get a kind of a glimpse of what, I started doing today. Anyway, go to the general chat room, and, going back to this conversation that we were talking about, Rayfuel said, hey, with increased volatility, I'm taking bigger positions. And, Ryan's like, when we see increased volatility, I take smaller positions, wider stops. And that's the kind of way I approach the market too. But these are the conversations that we have in the chat room, guys. So, if you want to be in a community that's, talking all about the markets and obviously Superman there, about the markets and charts and setups. And, we have very strict policy guidelines, no selling products in there, no talking religion, no talking politics. If you do, you're out, period. End of story. You're dismissed for life. So we have a really strong guidelines there in the chat room, and it's a really nice, safe community for traders. So make sure you go visit that for the ForexAnalytix crew. But I wanted to mention that because these conversations that we're having right here are conversations that we have all the time in the chat rooms, discussing these types of topics, because it's so important as a trader trying to navigate through. A lot of people come up to me and they're like, "Oh, Blake, you're so wrong," with regarding the euro. And it's like, because we're looking at the markets in two different lights. It's not you're right, I'm wrong, or I'm right, you're wrong. It's
all about time frame.
It is. It's all about time frame. It's about position sizing too, which is so vitally important when you're trading, because I've seen too many people over the last 2 decades plus that have just gotten crushed because they're taking analysis from people that are looking at the market completely differently, and B, they are over leveraging or getting aggressive in markets that really you take a market like what we're dealing with right now, and you got the S&P that's moving quite volatile or quite aggressively the last couple of weeks. You can get completely smashed in the market, and that's why we had to have a conversation about the difference between North American traders and European traders. Just we had to talk about that on Monday, because it's really important that you guys that are in Europe, you guys have spread betting, you guys have CFDs that you trade. Look, we're here in the US. What do we trade, Dale? We trade futures, right?
Yeah.
I trade a futures contract, and I take a like, let's just take a full size S&P futures contract. It's 16 grand. Yeah. And
margin, you mean? Yeah. Every
oh my God, this
$500.
This move right here, I would lose probably about, if I got long here and I just kept a stop that was way out here, I would on a $16,000 trade, I would be down 6, 7, 8 grand. I can't do that. But you guys in Europe, you guys in Europe have like spread betting accounts. You can sit here and you could let the S&P drop 30% and you could still leverage your way in all the way down. But we can't do it like that. It's different, how you can trade based on what you're trading. And then even if I do a micro trade with the S&P, just one, what's that? My broker, I'll look right now, it's like $1,600. So $1,600, I would still lose $500-$600 on a move like that. That's how traders really get themselves into trouble, because they don't understand the sizing that they're trading, the amount of volatility. So when you have more volatile markets, it's so vitally important to watch your size, understand exactly how much risk you're taking. That's why using a risk management calculator is so vitally important when you're trading certain instruments. So anyway, those are things that we talk a lot about that during inside of our community. So
do you know what that means? Do you know what that means, Blake?
What's that?
UK rocks. We rock.
You guys suck. No, I tell you what. If I had my choice, I wish I would have been a European trader, because you guys have really the best of a lot of things from a time zone perspective. Some of the products that you guys can trade is pretty cool. I am jealous. I have to admit, as an American.
You can still move to Greece, Blake.
You guys in Greece, it sucks. I had all sorts of aspirations about how wonderful it'd be to live in Greece, and then you guys got snowed in this week. So what's up with that?
Come on, it's 2 days a year. It's okay.
All right. Hey, I want to point out, since we were talking a little bit about the S&P here, really tight consolidation. I think this is, and this is something that Chris Weston and I talked about yesterday, late last night. And by the way, if you guys watch that trade-off show that I do with those guys, it is late at night for me. So if I sound like I'm jumbling my words a lot, that's because it is really like, the 14th hour of my day. So I am like really like usually a train wreck. So if you guys are like, oh, he's stuttering a lot, that's because I am tired. Typically I'm doing it at night and those guys are doing it in the morning. Anyway, but we were talking about how there was so much volatility in the markets and how we might be consolidating here. And I think if you look at the S&P in that sense, I actually think we are consolidating. And you got a lot of people that were short equities yesterday, and they're probably going to get stopped out today, as we rip higher. And then you have to think about that from a dollar point of view too. If you guys are out, buying dollars, and we see a reversal on risk today, and we see the S&P back above 44, let's just call it 44.25 in the S&P, which I think that's what we're doing today. I would assume that this dollar index might be giving us a breakout right now, which we talked about, dollar index hitting new highs. We might end up getting a false breakout, post, the London fix, once you start getting all the dollar buying out of the way, we might see a little bit of a reversal. And then that would set us up for a potential topside dollar index false breakout. And so you guys got to I think you need to be aware of that because of some of the things that we showed you as far as, key supports on the S&P and whatnot, or on the euro, excuse me. But anyway, I just wanted to mention a few of those things before Mark Chandler comes here. So we have, Stel.
I'm here.
It looks like I see Greg is here. We have, holy cow. Grega, how are you?
I'm fine, thank you.
Hey, man. And by the way, speaking of people I'm going to be talking to a little bit later today, Gregor Horvat and I are going to have a little sit-down discussion on the tradersummit.net site. So if you guys have not gone here, this is a free resource. I'm going to actually throw this link in the chat box for you. This is for all of you guys that are listening in. This is a free website for anybody to listen to. I'm going to be doing an interview with Grega today it should be pretty cool. So, Grega, how are you?
Fine. Watching volatility as you.
Yeah. So wait, do you have anything that you wanted to add here about things that you're looking at? Just a minute or two before Mark Chandler gets here in about 3-4 minutes.
Yeah, actually, I posted on Twitter last time you discussed with Dale that we are most likely in a wave 4 bounce on the S&P 500.
Okay.
And we highlighted this 4430 to 4500 as important resistance, which proved to be right on timing as well yesterday. So as you said yourself, I think this is a consolidation and that we could see a retest of this January lows before maybe potentially bottoming a little bit lower there.
Okay. Well, that's that. Oh, what happened with the cable? Did we just lose Johnson? Is he gone? I'm joking. No, Ryan, anything came in? You guys are both in the UK. Anything happening there? See the sterling getting crushed right now?
Yeah, no, I can see.
Yeah, it looks like we just sliced through the 618 retracement, which this has been like a downside target. Like if you look at, this is analysis from yesterday for the ForexAnalytix community. We were, targeting support at 133.85. We just broke that. So maybe some stops got triggered below there. I don't know.
This is something else I was looking for euro to make new lows without the euro pound confirming.
Okay, well, I think it's happening right now. So
it is happening.
It looks like the pound weakness is now trying to catch everything what it did 2 weeks back when cable was running higher by its own, actually, and now it's trying to.
Yeah. All right. All right, guys. Any last? Wait, really quick. We do have some data coming out right now. So let's. And for you guys that are ForexAnalytix subscribers, if you're not, just one of the things that's included here is their data flash, which will give us data as it's being released. So we got U.S. GDP coming up, jobless claims, and you'll see that information coming out about as fast as Bloomberg will push it out as well. So I'm going to pull us over to the euro dollar since everybody seems to be focused on the euro. We are, how many seconds, Stelios? Where are you at?
15.
Gosh dang, man, you are slacking. Holy cow. All right, so we got data coming out in about 15 seconds. Here's the euro.
Yeah, GDP, durable goods, all that coming.
Yeah, durable goods coming up too. PCE, there's a lot of inflation data. Oh, okay, so there's a durable goods just came out. Jobless claims.
GDP 6.9.
Wow. Yeah, look at that.
Yeah.
Not a huge reaction at all, actually. You know, one of the things I'm watching today is the dollar yen, which is, you know, right around that 618 retracement. We are pushing higher alongside rates following yesterday's move. So interesting. What do you guys make anything of that data that just was released? Look at the revisions here.
If the market doesn't care, I don't either.
All right. Well, fine.
You know, I mean, you know, if it doesn't, if it's not about market movement, who cares?
Be that way. Be that way. All right.
I
so
am that way.
Yeah. Hey guys, I want to thank you all for being here today. For those of you that are not part of the ForexAnalytix family, just remember this is our New Year offer. It only comes out once a year at these prices. There's only a couple of times a year that we do a special pricing, and this happens to be one of them. Offer does expire on January 30th. So, you know, if you want to join the family at the best prices of the year, this is it. Just happens to be this time of year. And then when it's gone, you guys know it's gone and you can't get it. A lot of people that wait around. We have people that wait around all year long for this price. So we'll see you guys in the family, in the community, in the chat rooms. Dale, thank you so much for hosting us today. Ryan, K-Man, Stelios,
cheers, guys.
and Grega, thanks for joining today.
Yeah, the dream team. Thank you, guys. Nice trading, Ryan. And my trading warrior brother, Mark Chandler. How are you, Mark? Great to have you back. Asking you to unmute.
Yes, sir. Good morning, everybody.
Hey,
Good
Mark.
day.
How are you?
Good morning, Mark.
Surviving.
You're surviving?
I think that's the best we can hope for these days, huh?
Oh, okay.
Hey, but listen, before the other guys go, let me just point out, you know, a couple of levels, key levels here. 111.50 in the euro. There's about almost a $700 million option that expires today, and in the yen, we're approaching that 115.50, and there's about a $775 million option that's struck there that's going to be expiring today. Sometimes those option expiries play a role, and just nice points to keep in mind.
Okay, Mark. I know that you appreciate that, and I know that you wanted to talk about this chart, the employment index chart. Everyone see it?
Yep. So that's the employment cost index, and the reason that's important is that it's coming out tomorrow, and that Powell made reference to it both in December and he alluded to it yesterday. And the argument is something like this. The Fed, like a lot of policymakers, not just in the US, but in Europe as well, they think that ultimately inflation comes down to labor costs. And I personally don't think that's true, but that's a bigger argument for another time. But the point is that the policymakers have been putting more emphasis on this. And this chart shows you just what a huge jump there's been in US labor costs. And this labor cost index includes commissions, unlike other wage measures. And we're expecting another large rise to be reported tomorrow for Q4. So this was the largest increase at least in 20 years since this time series began. It was up about 1.3% in Q3, and it looks like up another 1.2%. This would bring labor costs, this labor cost index, above 5% year over year. And this is why I think the Federal Reserve yesterday, the statement was like what everybody expected, I think, but the Powell's comments indicated...
Well, hoping, Mark, what everyone was hoping for.
Yeah, perhaps hoping for. But I think that the pattern is, though, the market to rally on the statement, and then Powell comes along and tends to put an end to that.
And I that's think different, isn't it?
Yeah, but I think what Powell did yesterday was important, because what he said was that, look, there's a lot of uncertainty in the world. We're not sure about inflation, We are sure about the strength of the economy, rising prices, and the robust labor market. He said, so the Federal Reserve needs to maximize its flexibility. Nothing was taken off the table. And here's what the market's pricing in now. It looks to me like the market's saying there's a 1 in 3 chance that the March hike is going to be 50 basis points. And the market's saying there's about a 75% chance we get 5 hikes instead of 4 this year.
Okay. All right. So, it's being reflected in currency prices here. So this is a new low for the move in the euro. Are we approaching any levels that you see value in euro down here, Mark? Because there are some technical areas of interest, say around 111, between 11 here and 110.50.
Yeah, so I know that there's going to be this temptation because we've had a false breakout in dollar yen to start the year. We got up to whatever 116.35, 45, and proved unsustainable. We had that breakout to the upside in the euro, and so of course I know that the tendency is to say, well, 3 in a row. This is going to be a false break too, but I do think that there's something something that's changed here, like a structural break, almost like a gap, and I think that my sense would be it's better, I think, right now to think about a level to stop out of short euros rather than trying to pick a bottom outright. So I'd be looking at now. I like that. I think someone had mentioned earlier 111.80, and my commentary this morning I thought it would be 112.20, but something like that. If those kind of levels don't break to the upside, I'd rather be short. I'm looking for a move to 110, maybe even below 110. Okay. And so I'm hesitant to think that. For me, the bull story of the dollar, Fed's gotten more aggressive. And remember, we still have these Russian troops. Imagine what a war could be like in Europe. And I'm not saying if today or tomorrow, but there's some meetings in 2 weeks. So I'd probably put that as a medium term, sort of second half of February type of issue. But I think that the backdrop seems very clear. The Fed, the Bank of Canada, the Bank of England, who meets next week, all in a hiking modes. And the ECB is going to drag their feet. They've got a meeting next week, and we're going to get CPI, a flash reading of January CPI. And typically, all but last year, say for the 10 years before 2021, inflation fell in January in Europe. And this is partly the practices of businesses. It's hard to tell what they're going to do this year. We're not in a normal situation. But the surprise could be a soft CPI from Europe next week, and then the ECB in contrast to the Federal Reserve. But let me say something else quickly, though, here, too, for you, Dale. That is that China is easing.
Yeah.
China's cutting rates, and yet the RMB until today was the strongest currency in the world, and it appreciated to 2 or 3 year highs. So just because you know the direction of interest rates, sometimes it doesn't tell you where currencies are going.
I think we're having a reversal week to the upside. That's a pretty nice looking weekly candle we're getting in the yuan.
In China. Yeah, the trick with China, though, is that the mainland is closed next week. The markets are closed for the week-long celebration of the Lunar New Year. And then next Friday, of course, opening ceremonies. Yeah.
I think that you have to be wrapped up in saran wrap and tinfoil and some bio gear to get into the country. And every 5 minutes you have to take a COVID test. I hear it's very difficult for the athletes in this environment. They're all in isolation. Do you know why they're saying that people could leave, U.S. citizens or diplomats could leave China? They're advising them to leave China?
We haven't seen anything like that.
Yeah, I think they're saying, I think it's because of the restrictive nature of COVID in China. But
it's true. It's true that COVID, that China's got this almost a zero tolerance policy towards it. And so this is part of the reason why I think the Fed is also concerned about the unknowns about inflation, supply chain disruptions. I think it was the Bank of Canada that's talked about yesterday that supply chain disruptions have lasted longer, persisted longer, and have had a greater impact than they would have thought.
So, Mark, we've had a pretty big break in risk, not the same magnitude of what happened in COVID, but, I don't think it's over. And, we haven't had such a risk-off environment for a while, and if you went to sleep for a month, you miss this one, but perhaps this one might be a little longer lasting. And how does that play into your analysis of currencies now that we've had 10-15% corrections? All last year you'd have 5 and then new highs, 5% correction, new highs. It feels different this time. Is this going to be cause some less demand for the dollar because everyone was parking in the FANGs? And I even heard people call the FANGs before, 3 weeks ago. They called them their safety trade. If they weren't in crypto, I'm telling you, Mark, I've heard this, that, people would liquidate crypto and go into the FANGs. That's where they would park their money on their safety flight to quality trade.
Yeah, so here's one way to think about it, right? We can think about like value and growth. And so before the U.S. market, cash market opens today, here's what it's been so far this year. The Russell 1000 value is down about 4.6%. The Russell growth is down 13.5%. So it's not that the value has gone up that you've saved, but you have saved like the opportunity cost. So I think that you're right that this is a new world of things. But at the end of the day, I think two things. One is I think someone had mentioned it earlier too, how important that risk management and money management is when it comes to trading. I think people who do make money in the long run don't make money because they're necessarily right more often. It seems to me they make money because they're more disciplined risk managers. So I am concerned, though, the big picture. I'm concerned that the stock market has more room to go down. Where are we really going to go at the end of the day? And that
there is no alternative. So if it is cash, is it going to be the dollar or other fiats, or maybe there'll finally be a flow into, dare I say it, gold after, this washout completes? And I remember in the last interview, you were worried about that the Fed's policy of tightening into what would be a softening economy could turn out to be a policy error. Do you still feel that way?
I still do. And I think that here's what I'm looking at. So leaving aside monetary policy for a second, fiscal policy, without that Build Back Better program, you see what happened earlier this week? The IMF revised down U.S. growth from 5.2% to 4%. We've got fiscal tightening that so after the great financial crisis, it took about 3 years to reduce the deficit by 500 basis points. That's what's going to happen this year. So we've got a big dose of fiscal tightening that Powell made allusions to, but I'm still not sure that is widely recognized. Secondly, is people, whether you're looking at charts, you're looking at macros, you're really looking at patterns. And one pattern that strikes me is that in the last 3 business downturns, the last 3 recessions we've had in the U.S., oil prices have doubled.
Right. Yeah, I remember you saying that last time. And here, I mean, it depends what level you take the low at, Mark, right? You're going to call it.
So I say, it doesn't make any sense to take the low when it was negative, but give me.
How about 20?
Or give me the vaccine when we were closer to 40, when the vaccine was announced.
Okay.
So, and then the other thing that's happening is that people have made a big deal about this boost in savings from the transfer payments and people not spending.
They still say their balance sheets are great. Consumers have so much money, they don't know what to do with it.
Yeah, but
you believe that?
Is that I see people talking about it, but I think that what's missed is that, you're looking at it too high of a level. The people who have savings are perhaps people like myself who get paid more than the median family income. But middle and lower income families, they're drawing on their savings. Pent-up demand is being met. And the last thing, and we saw this with yesterday's inventory data, which is one of the things that have helped the U.S. GDP number. You saw that 6.9% annualized rate, is the inventory cycle, right? During in 2020, they really drew down their inventories, and they've rebuilt them very quickly. And so that becomes no longer the tailwind for the economy. So these factors, monetary tightening, fiscal tightening, doubling of the price of oil, the use of drawing down our savings, the inventory cycle. All things point to me that by the second half of this year, we're going to be wishing we could, that 3% growth was still possible. I think that we're headed for a very big slowdown, and Powell admitted that there's going to be a market slowdown in Q1. The difference is, and of course, the Federal Reserve has much better economists than I'll ever be, but my bet would be that the economy doesn't bounce back like they think it will after the Q1 slump.
Okay, so yeah, that's gosh, do you think that before he gets all those rates in, because I mean, you're talking 5 months, I guess he could probably get maybe 4 in before he recognizes maybe another more damage in the stock market, the wealth effect, less fiscal stimulus into consumers' pockets, no more child care checks, that Powell can reverse again. I mean, is this the most reversals for any Fed chairman's tenure? Has Powell done the most flips, more than Greenspan?
Yeah, maybe. The Greenspan was in there for so much longer, but I kind of want to say that, like, what's the difference? Like, what's worse? Like, we never get it right. So what's worse? Being fixed in your views, stubborn, bullheaded, or is it flexible in responding to changing circumstances? And I think as traders and as investors, we have to have that like mental flexibility to have a hypothesis and then be willing to be proven wrong, not to attach our egos to these things. And so I kind of can have respect for someone who says, hey, listen, I was wrong. The facts have changed. I got to change my views.
Okay. All right. It depends how long, and he was stubborn with transitory. Don't you think he was stubborn for a while? When there were a lot of people saying he's, that he's wrong about inflation. It's going to be much more dramatic, and it's not transient with these, food
I think where the
prices.
Fed was most stubborn wasn't so much on the transitory, because I don't really think that the amplitude is really a factor when we try to consider how permanent it is. I too think that inflation is going to be falling. But where I think the Fed was wrong is I think that they were quick to expand their balance sheet and were slow to taper. For example, why should, we saw the numbers earlier this week, U.S. average house prices, 20 largest cities, up over 18% this year. I want to say, why in the heck are they buying mortgage-backed securities? And if inflation expectations are a key, I think we talked about this last time, I kind of think the Fed has been keeping its, like a butcher, keeping its thumb on the scale. They've been buying inflation-linked bonds and then telling us what the market's telling them about inflation. So I think the Fed should have pulled back from the bond buying much earlier, especially what it was buying.
Okay, so you think the leverage in the system is going to be able to take it? I mean, you look at what happened even before the stock market sold off in the corporate bond market, for example, and the junk bond market, Mark. They were under pressure well before we had this sell-off in equities.
Yeah,
don't you think there's bubbles there?
I don't know, like bubbles. I think that, to me, and this is why maybe tying it back to the FX market, one of the first things I look at these days is the broad risk environment. And that includes, ironically, crypto these days, which I think is a risk asset. Yeah. And so I think about the risk. And so for me, say the currencies like Aussie, Kiwi, Canada, the Scandies, these currencies often are moving in a group, and the divergence within the group is interesting, but this is a risk on currencies. Right. And we've seen this with the Canadian dollar. I mean, Bank of Canada was just as aggressive as the Fed was yesterday. And the Canadian dollar still suffered when the stock market headed south after Powell began talking.
Yeah. You like Looney here?
I like it I like the fundamentals, but I'd have to still be hesitant about trying to pick a top to the US dollar. But Canada would be one of the first I'd go for.
Yeah, because it is interesting with Dixie making new highs that were well off the highs here. So 131.
So what I find is in a strong US dollar environment, the Canadian dollar typically does well on the crosses, almost like the Canadian dollar gets dragged along with the US dollar a little bit more than other currencies. It gets hit a little bit less, as you may see it. And so maybe the way to do this, if you're trying to pick a top to the US dollar, is to get Canada on one of the crosses.
Okay. So that's a great idea to everyone that's listening, is look at the CAD crosses, because I think this is interesting, Mark. I kind of look at the fact, and it may end up not happening, but every other time the euro's made new lows here, Mark, euro pound has been making new lows with it. I think this is the first time in several months that the euro has made new highs with conviction, and EG is not making new lows. Could we be in a position here where, the euro's been underperforming cable for a long time, those flows might reverse?
Yeah, I think we need to get past next week's Bank of England meeting. Bank of England meeting next week is important. First,
okay.
I want to say the market's like 80% sure they're going to raise rates, but more than just raising rates. So the Bank of Canada is regarded, looking at what the swaps market's price in, is the most aggressive of the G7 central banks on rates. But what Bank of England said is that when their base rate gets to 50 basis points, which is what's going to happen next week's 25 basis point rate hike, they will begin allowing the balance sheet to shrink. That is to say, the Bank of England, will be the first to allow its balance sheet to shrink. And they have a huge debt maturity next month, I should say March. And so I think that despite the politics in the UK right now, and I suspect that the police investigation of this Partygate will buy Johnson more time, at least into the May local elections. But we'll have to see what happens with the Gray report due, any minute. But it seems that the market's shrugging off the political problems. And in fact, I suspect that if there was a headline that says Prime Minister Johnson's resigned, sterling might even rally more against the euro there for you.
Okay. Yeah, and it still looks maybe more vulnerable. Maybe it has more room to fall than the euro too, on the downside, if the dollar stays strong. Euro's already taken out the lows, and perhaps cable plays catch up with what the euro has already done. Do you think we could take out 129 in cable here, Mark?
Level. That's the key level, huh? 129, 130 in cable.
Yeah. Okay. All right. And you talk about oil, and you talk about Lunier's oil. So it's been so resilient. Oil's been resilient, Mark, and agricultural commodities have been resilient.
They're not so different. When you think about how much oil it takes to produce, like, I know a lot of my green friends talk about how much water it takes to get a bushel of corn or a bale of cotton. But it's amazing is how much oil you need between the fertilizer and the pesticides.
Yeah. And China not wanting to sell fertilizer. And that's one thing that I've always been confounded about. If a lot of this inflation is food-based, just because rates, there are 6 Fed rate hikes, people, I'm not going on a diet, are you? Unless I can't find what I want in the store, that a forced diet. But how does tighter monetary policy rein in higher agricultural prices? It's about weather. It's not about interest rates.
Yeah, right. That's really the problem that Powell tried to address. That kind of sidestepped a lot of the issues I thought yesterday. But so there's supply side factors and some demand side factors fueling inflation. And so because the Fed can't really address the supply side, they basically double up their efforts on the demand side. And it's sort of like that psychologist Abraham Maslow. He says if all you have is a hammer, every problem looks like a nail. And so the Fed can address demand side issues, and they can do that by squeezing demand, and that's what they're going to do. Because they can't do anything on the supply side, they double up their efforts on demand.
Okay, well, higher prices may lower demand, but I just don't see how higher interest rates reduce demand for the essentials, food.
Right. And that's what happens,
it's not grains are not really an economically sensitive group of commodities. So
Right.
anyway,
So-
I showed you. Remember, Mark, the chant used to be at the Board of Trade, beans in the teens.
Beans in the teens.
Yeah, and now they're always in the teens, or
Yeah,
quite a bit. Spend a lot more time in the teens. Maybe they're actually going to be old enough to vote, and the 20s are the next target for these.
What's funny with the grains is that they also now become part of our energy story, huh?
That's true. Yeah, ethanol. Ethanol, and this natural gas. Also, we're so fortunate here in the U.S. to be getting our natural gas at these prices. And I heard even within the U.S., there's disparate prices depending upon infrastructure, because the Europeans.
You touch on a good point, though, too, with the natural gas and the other elements of the energy complex, because the rise in gasoline prices. You've seen what's happened politically in the U.S. Biden's support has fallen. Yeah. He's being blamed for higher inflation. And how do most of us experience that higher inflation? Your food story. I think that's how I experience higher inflation. And of course, gasoline prices. And gasoline is up almost 10% this year.
Yeah. Okay. So what are your thoughts about what's happening on the Ukrainian border? And, I've heard some people say that it's a geopolitical inflection point that's going to, have an impact on the world for years to come. What do you think, Mark?
Yeah, I don't know. I have, we all have neighbors. And I know if my neighbor is worried about something about me, we're not going to really have peace.
Yeah.
And I think that two things really. One is I think we confuse the kind of regime Russia has, this totalitarian regime, with its geopolitical interests. And I think that even if there was a democratically elected reformer, they would not accept NATO forces in Ukraine or in Georgia. And so I think that in this particular case, in this particular moment in time, I'd be more inclined to what happened with Finland. Finland, we call it the Finlandization. What that means is that Finland, up until recently at least, has been sort of charting a neutral foreign policy in exchange for having peace with Russia. I don't see why we don't. I mean, it doesn't sound very fair, but I think the similar type of thing should happen with Ukraine and Georgia. It's not fair, but this is like the tragedy of small countries next to big countries. All we have to do is ask Latin America, ask Cuba, ask Grenada what it's like to be next to a big country. It's not fair, but this is a realist view of the world. And so I would be more inclined to avoid a war, get Russia to feel somewhat safer so they can stop being such an aggressor, and neutralize the foreign policy of Ukraine and Georgia so at least it does not join NATO. And there's a lot of steps shy of joining NATO that could help defend Ukraine.
Great point. I don't know if our politicians and the big money interests are going to be as rational and, thinking with their heart rather than their wallet. But yeah, I'm just thinking the landscape's going to change dramatically if there's an invasion.
Yeah, so, I think too, how the U.S. strategy sort of requires a lot of people thinking about like the Cuban Missile Crisis. And one of the sort of the underreported elements of how to get those Russian missiles out of Cuba was for the U.S. to quietly remove its missiles from Turkey. And so what we're going to do is we're going to be forcing China and Russia to grab, to the extent they can, their own chips to negotiate. Imagine what would happen when Russia puts missiles in Venezuela or Cuba.
Yeah.
And why should not Cuba decide which weapon systems, which allies they have, just as much as Ukraine should? And I don't know if this is the kind of world I want to live in and have my children grow up in.
Yeah. So we don't know if we have faith till we need it, Mark. And God, we covered so much ground in this time frame. What a great day to have you. And we have a lot of challenges, but within the challenges are opportunities, right?
I hope so.
All right. Well, you know what I say about hope, Mark? Hope is the oxygen in our lives and the carbon dioxide in our trading.
Exactly. Exactly. Well
But you
put.
need hope. I mean, you know, you need hope. If you're hopeless, why trade?
Exactly. Very good.
Anyway, Mark, great talking to you, buddy. And everyone, you know, knows where to follow Mark at Mark Making Sense, and you know, go to his website for his readings at marktomarket.com, and keep in touch with Mark's thoughts and insights and wisdom through a challenging period that we're about to enter. So thanks again, buddy. Appreciate you
Yeah,
being
good luck
with
to
us.
everybody.
Yeah, good luck, and good luck to you. You'll be talking to Blake, I guess. We're sandwiching you today.
Very good.
All right, thank you, Mark, for being
well.
here. And all right, take it easy. So that's going to be a wrap, everyone, for the day. Hope you enjoyed Mark. I love talking to Mark, and you know, I can ask him anything, and he has an answer for it. And you're welcome, Mark. People enjoyed, and they're thanking you. And thank you, guys, everyone who's here on F.A.C.E every day. You know, it's my mission, our mission, to build up and edify traders every day. Hope that we're accomplishing our mission. But most of all, and especially in these times, don't just count your pips, count your blessings. And we'll see you to wrap up the week tomorrow. Adios.